Hello, everyone. It's Mr. Spectacular. Welcome back to another episode of Technically Speaking. Today is Tuesday, the 5th of April, 2022, just past 5 p.m. Now, before we talk about crypto charts, money, and all the good stuff, let me throw out a disclaimer. None of this is financial advice. This is meant to be taken as education and hopefully a tiny bit of entertainment. And just in plain language, as we like to call it, my Polish disclaimer: don't be an idiot, trade responsibly, because you can lose money. And if you blow your entire account and you end up on the street and a girlfriend starts to dump you because you've lost all your money, don't come to me complaining, because I warned you. Now, let's look at the charts. So as you may have seen, a couple of days ago, we did an episode of Michael talking more about the macro stuff and the fundamentals. We did a bit of charts as well, but today all we're literally going to do is just charts, because I like charts and charts speak to me. So let me speak to you through the language of the charts. And the first one I want to look at is the Bitcoin dominance chart. So in case you are not familiar with it, this chart tells us the percentage of the total cryptocurrency market cap that is taken by Bitcoin. So as you can see, we bottomed out around January, mid-January. From there, Bitcoin has been gaining more and more dominance. It peaked out at around 40, just under 44%, came down, went up to 44% again. And ever since then, this chart has been in a downtrend, which basically means whenever Bitcoin dominance drops, obviously, inversely, altcoin dominance will increase, which means that as the market cap of cryptocurrency increases, altcoins will tend to outperform Bitcoin for the most part. Now, if you look at the charts that we have today, everything's down pretty much. Bitcoin's down 2%, ETH down 2%, Sol down 1%, Phantom down 4%. But for the general principle, alts will tend to do better. For example, one of the trades that I entered a couple of weeks ago, roughly 3 weeks ago, mid-March, didn't do much for the first couple of days. You may have seen the story that I posted on Instagram. Essentially, it did like 60% today alone. So there are anomalies in the market, obviously. You can't predict the future. You can't predict exactly what's going to happen. But I'm just drifting off into trading philosophy and stuff we don't really have the time to discuss right now. But that's the chart that I like to pay attention to, because it tells us how the alts, for the most part, tend to do compared to Bitcoin. So it makes more sense to hold alts in those times. Now, if we switch out to the total cryptocurrency market cap, so obviously we had this big pullback and started forming this triangle pattern since basically the second week of February. One thing I find it mind-blowing is how this doesn't seem like a whole lot of time, where in reality it's 2 months. That's how charts can be slightly deceiving. But yeah, we formed this triangle pattern, and as you can see, if we zoom in, this basically formed like the trend line, touched it here, pulled back a bit, retested, broke above it, and we've held it up until this point. And one way that I really like to trade is I like to look at the levels that we need to basically break through and sustain in order to either continue our uptrend or signaling possible reversals, or to continue the downtrend. So we've had this level here, we broke through it, held it. As you can see, we've retested it again here, so it's a pretty good area of support. We've taken out this level again, we've held it, retested it again here, and now we are trying to break through the $2.14 trillion total market cap for the entire, let me get this out of the way, for the entire crypto market, which also happens to be a pretty significant level on the Fibonacci extension for the total market cap. If we absolutely zoom out, this is what it looks like. So as you can see, we still have a bit of a room to go, although I don't think we'll be hitting all-time highs in this cycle. I don't want to keep repeating myself, guys, so hopefully you've watched the previous episodes, but the bottom line is I think we are going to have a bit of a run and then see a 20k Bitcoin. But yeah, that's I've gone into detail in another video. Now, if we just quickly look at the fib retracement, where are we at now? Yeah, so again, we've held at this level, and yeah, so we have pretty good support over here, and we have quite a bit of room to go here. So if like, let me emphasize, because some of you guys come into this thinking this is like a lottery or a cash machine. You cannot predict the market, you cannot dictate the market will do whatever the market wants to do, and none of us have sufficient firepower to move the markets. If you have billions of dollars, yeah, you can move the markets, but if you are just like most of us, even if you have millions, you still don't really have the power to move the entire crypto market. But yeah, this will be a level for us that we definitely need to break through, because we're right now we're just playing with it. We need to break through it, hold it, probably come down for a retest. We might actually retest this level here today, because we are slightly down on the daily. And yeah, if we do break through it, this one right here would be the next one that I'd be looking at. Now, if we look at the total twos, which exclude Bitcoin, so total market cap minus Bitcoin, again, same chart pattern, same exact thing. Because look, at the end of the day, it's all correlated. It's all correlated to Bitcoin. It's all leveraged Bitcoin bets for the most part. There are exceptions. We're not talking about, well, we're talking about generalities at this point. So again, we've had this pattern here, broke through it, this time retested here, and we've been up ever since. Broke through this level here, broke through this level here, held it, retested here, and now we are sort of stuck here. Now this would be the next level for us to conquer. Now, if we look quickly at the total threes, so that's all the altcoins minus Bitcoin and minus Ethereum. Again, same exact thing, same pattern. Broke through it, been up, held at this level, held at this level, and now we are playing around with this level here again. We are right on the line, so it'll be interesting to see what happens today and tomorrow, probably second half. the start of the second half of next week as well. And then if we could break through and hold at this level, that will be very, very bullish for our path going forward. Because as you can see after this, there's just this, and then all-time highs for all the altcoins, excluding Bitcoin and Ethereum, which a lot of them have quite a lot of potential to go, and they're still way off from their all-time highs. Now, if we go to the Bitcoin chart specifically, so one thing I like to do is I have like 4 different charts for Bitcoin, because I check different stuff on all of them. So Bitcoin dictates the market. Bitcoin is the biggest one. So whether we like it or not, for the most part, it still dictates what is going to happen, because the second money stops flowing into Bitcoin, everybody just starts gambling on altcoins, Doge and Shiba and all the shit coins. Money flows out of Bitcoin, we lose support, everybody is going to think it's all going to zero, and they're going to start pulling money out of everything else, essentially. So this is how we are looking on the fib extension. So again, if we like really zoom out all the way to 2018, which I don't think there is any point in looking past 2018, because it's literally pointless to look at a Bitcoin that's $100 if there even is such a chart, because the scale of it is just incomparable. It's absolutely incomparable. So this would have been our peak, most likely a peak for Bitcoin in this cycle, and currently we are just around the 2.618 extension level. And as you can see, we've broke past it, and well, currently we're a bit stuck. There might actually be a smaller version of this pattern forming. So if we connected this and this, that might form a bit of a chart, that bit of a pattern that's just like coiling up to explode. Now, which way it is going to explode, you never know, because even though these patterns are supposed to mean and signal certain things, the fact that everybody else is looking at the same pattern, the same chart, almost guarantees that it's not going to play out, or it's going to take out everybody on both sides before it actually does what you expect it to do. Selling the whale makes the money. Now, if we look at the retracement, again, we are around a pretty key level. If we can hold this support, which would be just above, just under 47K, that would be pretty bullish. And just for the last chart, looking at the levels that I marked out. So again, we've broke past this local high here. We're holding it pretty good so far. We did have some wicks down, but so far so good. We are holding the line. Now, next level for us to conquer would be 52K. Well, obviously still needs to take out. Yeah, probably should mark this out as well. See, it's actually pretty good to listen to your own faults sometimes. So yeah, we need to conquer 48. So if we did, let me attempt to draw something. I'm not good at drawing, guys. I'm good at drawing straight lines. I'm not good at drawing stuff on the charts, but oh, so I'm supposed to hold. Okay, cool. Yeah, if we did go up from here, we'd probably break through, have a bit of a sharp wick down, come up, retail is wick again, and then go up. That's sort of what I would picture if I was a wizard, which I am. Maybe not, who knows. But yeah, if I was predicting the future, I would say that's a likely scenario. And around between these two levels, between 48K and 52K, that's where, oh no, I don't want to draw anymore. Switch to this. Between 48 and 52K, that's where you will see massive retail FOMO come in. Because right here, whoever bought down here, whoever bought here, whoever bought here, and whether you bought Bitcoin or altcoins, it doesn't really matter. It still applies. So whoever bought in this range, that's whales, that's smart money, and that's smart retail as well. Your average retail investor that takes investment advice from his his neighbor who owns some Shiba, for him this is too risky, because he's seen, no, I don't want to draw, he has seen this entire move down, and he's thinking this thing is going to zero. This thing is going to, the gods of Twitter are saying Bitcoin is going to 10K. Yeah, not yet, guys, not yet. Hold your horses. But it's easy to tell, like I said in the last episode. Right here, people will ask, yo, is Bitcoin still a good investment? Here they will ask, should I start shorting now? And they're usually wrong. So right now they're still uncertain. They're still a bit uncertain down here. If we start getting to this range, look, they've already missed out on a 40% move. Dude, 40% in a time where the bank pays you 0.001% and official inflation numbers are 7%, which they are not. Let me just tell you, like my mom in Poland, I think their official numbers are like 9%, something like that. The price of coal has literally doubled from last year, and that was before the whole Ukraine-Russia situation. So just wait and see what happens with the numbers as we progress. But yeah, a 40% increase, it's pretty good considering the time we're in. And as I've stated in other videos, the most successful hedge fund managers in the world, they generate about 30% a year on a good year. So us crypto guys, we are greedy bastards. that's just the truth. We're greedy and we're spoiled with ridiculous gains that have been easy up until now. But this is no longer the age of the amateur. This is the age of the professional. This is a time where you have to take your education and your skills seriously, because that's the only way you're going to make money in this game, because you are dealing with players who are way more sophisticated than you, have way more tools at their disposal. They have teams, algorithms, unlimited capital to, I will try to mind my language, but to take your money. So just remember that. So yeah, the bottom line is, if, and let me state that, if we can break through this and hold between 48 and 52, that's when you're going to see retail really start piling in and really start getting that FOMO. So let's just look at a couple other charts before we start wrapping it up. So volatility index, again, we've seen it drop ridiculously the last, must be at least 2 weeks. Yeah, at least the last 2-3 weeks. We're up 10% today, but still compared to where we've been, it's not too bad as long as this doesn't continue. The dollar index, see, whenever volatility rises, the dollar index usually rises as well. But in recent times, we have not broken past this level. And it also happens to be a pretty significant, I think it's the retracement level, I don't remember. Yeah, it's a retracement. Pretty significant retracement level. So as long as we don't break past this today and the next couple of days, we should be fine, because people fleet dollars when they don't feel safe. And as you see, Bitcoin, Ethereum, they're both down today. And stocks, as far as I remember, yeah, they're quite down. Tesla, well, quite down compared to where we've been the last couple of days. Tesla dumped as low as $700. Now it's at like almost 1100. So it's still not too bad. And actually, I need to erase this whole chart because there's too many colors. I am switching exclusively to white and gray. That's it, period. Whether it be candles or trend lines. If you want to know the reasons why, I think I mentioned it in another video. If not, you can shoot me a DM and I'll explain it to you. But yeah, down 5% today, which again, compared to the last couple of days, it's not too bad. And if this was set up like a standard chart with green candles going up and red candles going down, red candles give people PTSD, and green candles give them amnesia. They instantly forget about all the pain they've just been through. They think, oh, we're going to the moon now. We're going to the moon. Yeah, watch out for that. Now, one thing that's been really interesting is Twitter, because Elon Musk just became the largest shareholder. And yeah, it did like 20-30% yesterday. So it's pretty sick. I'm actually quite happy about that, because I like what Elon is about. Now, a quick look at the markets before we wrap it up. So yeah, S&P 500, we've had a pretty nice recovery, bit of a pullback, up yesterday, so down today, but still nothing cataclysmic and nothing that I would majorly worry about. And it looks like my chart froze. But yeah, guys, I have like 10 windows open in here and 4 more desktops, and I'm recording, so forgive me for that. Hopefully he's gonna start cooperating. If not, we'll just move on to something else. Yeah, this has stopped cooperating. Anyway, let's just quickly look at the fear and greed index. And please, 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 the gods of the internet, don't show me any ads with British politicians, because I'm sick of these guys. Let's see. Come on, guys, don't take it personal. I'm just joking. I'm just joking. I'm trying to be funny. Okay. Last time I remember, we were around 50. Yeah. We're at 50 with 53 today, which is pretty neutral. And yeah, we are stepping into greed territory. So last week we peaked out at 56, and only last month we were at 22. So remember what I said about amnesia. People forget very, very, very quickly. Yeah, 8th of March, 2021. A couple days ago, 60. So this thing moves pretty fast. So that's it for today, guys. Hope you've enjoyed this video. If you did, make sure you smash the like button, drop a comment below. And if you like this sort of stuff and you want to learn my complete trading methodology and system, you can message me on Instagram at It's Mr. Spectacular, and we'll go over your situation and see if I can help you. Now, if you'd like to see the trades that I'm doing and basically be able to follow in real time, you can check out our Signal service. The link for that is in the description below if you're watching on YouTube, and in the link in our bio if you are watching on Instagram. So basically, I will be posting the trades that I'm entering, when I'm entering them, and upon doing your own research, because you are a responsible investor, you can follow along at your own risk if you'd like to. Now, before we wrap it up for real, let me just finally throw out one last disclaimer. None of this is financial advice. I am not a financial advisor. Basically, I know nothing and I just make it up as I go along. So you should definitely not listen to anything that I've said in this video. You should listen to the government and you should put your money in the bank, because at least you'll be safe. So that's it for today, guys. Have a spectacular day, and I'll see you in the next video.